Imagine you're a sailor navigating a storm at sea. The waves are crashing, the wind is howling, and most boats are struggling just to stay afloat. However, there's a few boats that seem to be weathering the storm much better than others. They're not necessarily moving forward, but they're holding their ground and remaining stable. These are the boats with high relative strength. Think about this. If a stock is so strong that it trades sideways or even slightly higher while the rest of the market is getting whacked, what do you think happens to that stock when the overall market eventually bounces too? Well, that stock is typically the first to explode the new highs ahead of the broad market. Similarly, when the overall market is trending lower, stocks and other assets with high relative strength tend to hold up better and often fall less than other stocks. They may not be making significant gains, but their ability to hold above support during periods of market decline show that they're resilient and potentially poised for further gains, especially when the broad market eventually reverses higher. Let's take a look at a real-world example that demonstrates this concept. Take a look at this chart. While the broad market, represented by the S&P 500 index, trended lower, notice that VRT managed to hold near its high and trade sideways. This is a classic example of relative strength in action. Stocks with high relative strength, like VRT in this example, can maintain their price levels during market downturns and are typically the first to bounce back and become new leaders when the market eventually recovers. Now, this first example shows how high relative strength assets can hold firm while the overall market is weak, but the same concept applies in bull markets as well. In uptrending markets, stocks, cryptocurrencies, and other assets with top relative strength tend to outperform their benchmarks and deliver exceptional returns. They're like speedboats that can cut through the water faster than the rest of the fleet when the conditions are favorable. In this example, we see a crypto altcoin with high relative strength surging ahead of Bitcoin during a broad crypto market rally. While our Bitcoin benchmark is certainly moving higher, the altcoin is rallying at an even faster pace, confirming its high relative strength to take advantage of bullish momentum. And if the overall crypto market suddenly turns lower, this altcoin with high relative strength may also become the last to fall. This is the power of relative strength in bull markets, maximizing gains by focusing on the strongest assets leading the charge while also minimizing risk. As a swing trader, it's important to recognize the current market conditions and adapt your relative strength analysis accordingly. During bear markets, for example, focus on assets that are showing the most resilience and holding up better than their peers. These charts often jump out at you because the price can largely ignore the weakness all around them. These are the assets that have the potential to bounce back strongly and become new leaders when the market recovers. On the other hand, in bull markets, look for the strongest outperformers that are leading the rest of the market higher. By focusing your trade setups on these clear market leaders, you can potentially increase your gains and significantly outperform the market. The key is to combine your understanding of relative strength with an awareness of the overall market conditions. By doing so, you can potentially enhance your performance in both bullish and bearish conditions. Now, let's check your understanding of relative strength in different market conditions. Here are two charts. One is showing a stock's relative strength in a bear market, and the other in a bull market. For each chart, analyze the relative strength of the individual asset compared to the benchmark, and consider the following questions. How is the stock performing relative to the benchmark in the given market condition? What does this relative strength tell you about the stock's potential for future performance? And finally, based on this relative strength, would you consider trading the stock in this given market condition? Pause the video now and take a few moments to analyze both charts. Once you've completed your analysis, resume the video and we'll see what you discovered. Okay, in chart 1, we see supermicrocomputer, SMCI, outperforming the S&P 500 index during a bear market. Notice how SMCI formed higher lows and showed bullish price action, all while the S&P 500 was forming lower lows. Our relative strength analysis told us that SMCI is a resilient stock that might explode higher when the broad market eventually recovers. And as you can see, that's exactly what happened. In the second chart, we see that Amazon, AMZN, is outperforming the S&P 500 during a bull market. While the S&P 500 cruised 20% higher over a 5-month period, certainly not a bad return, Amazon scored a supersized gain of 60% during the same period. This relative strength indicates that Amazon is a clear market leader and may continue to deliver outsized returns as long as the bull market persists. Based on the relative strength we observed for SMCI and AMZN in their respective market conditions, both stocks could be considered as potential candidates for trading. However, we don't just blindly buy as soon as we spot relative strength. Instead, we add the asset to our relative strength watch list. Then we patiently wait for a proper MTG setup to develop before buying. We're going to dive into setups in the next module. This simple, rule-based approach ensures we are always focused on ideal, relatively low-risk buy points of the strongest stocks, cryptocurrencies, or any other type of asset. By analyzing relative strength in the context of different market conditions, you can gain valuable insights into which assets are likely to perform well in various scenarios. Being adaptable is key to successful swing trading and can help you navigate even the most challenging market conditions with confidence.